Just letting you know that we will be getting started in about 2 minutes. So get that last sip of tea. Well, you can continue to sip your tea. I'll be taking a break from my tea. Ah, I see. Coffee for some. That friend's still joining. All right. I think we may be ready to get started. Welcome. My name is Dwayne Lawson Brown. I am the Community Engagement Specialist with the DC Commission on the Arts and Humanities, and it's my pleasure to welcome you to today's Business of the Arts session. So, just for some context, Business of the Arts is a program aimed to provide knowledge and skills through resources and workshops. It's focused on fundraising and development, marketing and public relations, as well as legal concerns and entrepreneurship. Free workshops and seminars are led regularly by accomplished professionals and subject matter experts, just like who we are going to learn from today. Uh, our topic, our topic today is tax considerations for individual artists, and we will be joined by Farrell Parker, representing Artist Tax Prep. A few things to cover before we get today's session started. Um, for questions, yes, this session is being recorded and it'll be shared via our website. And I'm actually about to drop the link into the chat now. You can actually go back and look at any of our past Business of the Arts sessions right there within the chat. But for those who may be watching later and may not have access to the chat, that is dcarts.dc.gov/page/business dash arts. And you can access our previous Business of the Arts sessions there. So back to logistics. We ask that you remain muted and we will open the session for questions and answers at the end of the session. We also have a Q&A box. So I believe you click the three dots that are above more, and then you can add your question directly into the Q&A box. And once you add those questions, we'll be fielding those questions so that they are answered at the end of the session. All right. And with that, it is my pleasure to welcome Artist Tax Prep's Farrell Parker.
Hi, everybody. My name is Farrell Parker, like Dwayne said. Thank you. I would love to know if you guys could drop in the chat your what your artistry is, your multi-hyphenate, just to see where people are coming from a little bit. So put that in the chat, what your artistic practice is or your involvement with the arts. Um, I am from New Jersey, but I've been in DC since 2011, so primarily a performing artist in the area. Um, my undergraduate degree is in business management, and I got a classical acting MFA because of how much I love money. Um, I founded Artist Tax Prep in 2018 when I was working professionally as an actor, but it was too many jobs, as maybe some of you are familiar with. I think I had like 7 different jobs. So I always liked doing my taxes and knew that. most artists dread it. So started as a volunteer with the Volunteer Income Tax Assistance Program, which I'll share more about a little bit later. And doing 10 people's taxes the first year, and now we have around 500 clients and two other preparers who are also DC-based artists. Um, so yes, let me share my screen. I'm looking at everyone's visual artists, teaching artists, designers. So great to have everyone here. Okay, cool. Choreographer. You're all amazing. So we're going to talk about income taxes for artists. Um, Primarily, a lot of what we talk about, maybe not primarily, but we're going to focus a lot on self-employment and the self-employed perspective because it's generally where people seem to need the most help. Um, and also because a big part of that is because under current tax law, most people who are working on a W-2 as an employee do not have the ability to deduct employee expenses from their tax return, especially DC residents. There are some states where there's an exception for that, but on the federal side, that's currently the case. So that's why we'll be focusing a little bit more on the self-employment end of things. And Dwayne, if I cut out or anything, just verbalize that to me so I can adjust. Thank you.
No problem.
See. All right. So we are all coming from different levels of education of taxes because for some reason they don't want to teach us that in high school. I would love to be an advocate for that since we all have to end up doing it's really, you know, you end up just knowing what your parents know, I think, or what your family background is. So I'd love if you could also put in the chat which of these describes you about your current level of tax knowledge. A, you feel confident in your knowledge and you just want to confirm with a pro. B, you feel like you know nothing. C, you know a little, but it doesn't feel like enough. And D, the information out there is confusing. It might be more than one. And I should also say that this presentation is for informational purposes only and should not be considered individual legal advice. Okay. A lot of D, the information is confusing. Okay. Not too many A, but a few. Great. Thank you guys for sharing that. And now I want to hide it. Okay, so just to give you a little overview of what we're going to talk about, am I a business? Um, Taxation of self-employment, business expenses, expense tracking, other self-employed deductions, estimated taxes, some myths and misconceptions, damage control or what to do if you think you might be in trouble with the IRS, resources, and then we'll hopefully have time for some questions. Um, and I am going to wait, I think Dwayne said, till the end to answer those. Okay, so Schedule C is a form that you might fill out on your taxes if you have a profit or loss from business. And essentially, this is the form that lets the IRS know you have a business. If you received at least $400 as an independent contractor or in exchange for goods or services throughout the year, the IRS considers you self-employed and that you have a business. You are a self-employed person if you carry on a trade or business as a sole proprietor or an independent contractor. You do not have to carry on regular full-time business activities to be self-employed. Having a part-time business in addition to your regular job or business might be self-employment. Um, A trade or business is generally an activity to carried on to make a profit. You don't actually need to make a profit to be in a trade or business as long as you have a profit motive. So you do need to be making ongoing efforts to further the interests of your business, but essentially if you have a profit motive or you're trying to make money in a field and it's primarily self-employed and not W-2, you have a business according to the IRS. Some of what I talk about too, guys, is part of the reason there's so much confusion is because tax law doesn't really get deleted. We really just add laws on top of laws. So this is a lot of the reason that you'll find a lot of confusing information out there, and it's very information can be out of date very quickly. So my one of my tips, and I'll probably repeat this, is whenever you're researching or Googling tax information, add IRS to your Google search so that you're getting the information from the source and check the dates, because it really should be within the last year, any information that you're looking into about taxes. So, what do you actually need to have a business? You need a profit motive. You need to be keeping records of your business activity, and you need to be in an ongoing effort to make money. Best practices, in addition to that, you have an EIN, an employer identification number. That is something you get from the IRS. Do not pay someone for it, it's free. If you're ever looking into that, an EIN really just protects your social security number, and gives payers a way to pay you that doesn't expose all that information. It also allows you to pay other people. Best practice to have a trade name, a business checking account, business insurance, and registration or permits, whatever is required by your type of business. It is optional to have an LLC or formal business structure. Having an LLC is not what makes you a business. An LLC is a state designation. It has no impact on federal taxation. Um, It also, there are legal protections for an LLC that don't have anything to do with tax law, with my end of things. If you're considering one, that's a consideration. But for federal tax purposes, or for your treatment as a business by the government, it's not going to make a difference, if you just have an LLC. Um, you may want to look into the election to file as an S corp if you have an LLC once you are consistently taking in over $100,000 annually from your business. That's typically from a tax perspective when I would recommend an LLC or formal business structure. And until then, what you're called is a sole proprietor. Oh, I should also say you'll want to have a formal business structure if you are entering into a partnership, or if you're putting a lot of capital into something and want to protect your personal assets. Many individual artists are not doing that. So it might not behoove you to do that because it adds complications that sometimes can hinder the practice. But again, it's specific to your situation. I would say sometimes this applies to people if you have like a book deal or you're receiving advances or royalties. But unless you are at that over 100,000 in self-employment, it really adds complication and expense. So you can build credibility in other ways other than having an LLC by your name, I would say. So let's say you determine that you are self-employed, that you are a business, and you do need to file a Schedule C. The Schedule C will determine if you need to pay self-employment tax on your profits. So, self-employment tax is only on profits from business. And the reason that people complain about 1099 taxes or how much they have to give is because this amount is in addition to your income tax rate. So this is a fixed percentage. It's based on the percentage of your income that goes to cover Social Security and Medicare taxes, which are typically covered by employers. So that's why your taxes as a self-employed person feel so much higher because this chunk, this 15.3% is being covered by your employer if you are being paid on a W-2. So as a self-employed person, you are only taxed on your profit, that 15.3%. So your business income minus your business expenses, that equals your profit. Your profit times the income tax rate plus your profit times the self-employment tax rate equals your total taxes on self-employment income. You might want to screenshot this. I just give this because sometimes it helps people to have a little bit of an idea of the math as to what those numbers are coming from. So this is just an example. That wouldn't probably reflect all the real world issues, but gives you an idea of how much you're going to see on that self-employment income tax, just to illustrate. So your income tax rate is variable and your self-employment tax rate is fixed under current tax law. Okay, so yes, if you have self-employment income, 1099 income, or are a business or sole proprietorship, you have to pay self-employment taxes. The trade-off is that you also get to deduct business expenses, which employees, as I said at the beginning, cannot do at all under current tax law. We'll see, we'll see what happens with the current tax package and what changes we'll see. The current tax package we're under is primarily from this administration anyway, the last time. So I would anticipate a lot of it to stay the same, but who really knows? Um, I like this Schitt's Creek example. I love seeing like tax write-offs discussed on sitcoms. I feel like a lot of them get into a write-off, but a write-off is a business expense used to reduce your taxable income. So clarifying means that if you write something off or deduct it as a business expense, it doesn't automatically mean you're getting money back. It's just reducing the income that you are taxed on. I think sometimes that is a misconception. Okay, I want to clarify the standard or itemized deduction versus business expenses. Standard deduction is, or itemizing is probably some terms you've heard in addition to write-off when people talk about taxes. Um, Sometimes people think itemizing and taking your business expenses as a deduction is the same thing. And I am here to tell you, if nothing else that you learn in this presentation, that you can take the standard deduction and also business expenses. They're two completely separate forms. The standard or itemized deduction impacts your income tax. Your business expenses impact that self-employment tax that we talked about. Um, so if you are self-employed, you get the standard deduction plus your business expenses. Um, Standard deduction or itemized deduction. Everyone takes one or the other. The standard deduction amount is determined by your filing status. So for this year, this 2024, the standard deduction is $14,600 for single filers and $29,200 for married filers. This money is essentially the money the government says you should be able to earn tax-free. So that deduction amount reduces your taxable income by that standard deduction or itemized deduction amount. 90% of people take the standard deduction. You might itemize if you have a mortgage. So I would say mostly people who are itemizing are homeowners. And this is a good time to point out that charitable donations are not going to make a difference on your tax return unless you are itemizing your deductions. So unless your itemized deductions, which is state and local income tax, real estate tax, mortgage interest, medical expenses that exceed 7.5% of your adjusted gross income. You can see how this gets complicated. Plus your charitable donations exceeds that $14,600 for individuals. So again, 90% of people are going to take the standard deduction. Business expenses are limited to those within business income and can essentially be any dollar amount. So when people ask me, is it worth it? In my opinion, it's always worth it to track and deduct your business expenses. If you have 1099 income, self-employment income, or a desire to make that income and a practice to make that income. So, what is allowed as a business expense or write-off on Schedule C for profit and loss from business? To be deductible, a business expense must be both ordinary and necessary. So, an ordinary expense is one that's common and accepted in your industry, and a necessary expense is one that's helpful or appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary, but it should not be considered lavish. And when I talk about ordinary and necessary, this is where we really get into the idea of taxes being about law as much as it's about numbers. So a lot of this is how we are interpreting the law or the words ordinary and necessary, how the courts have interpreted those words. But essentially, if you're wondering, is this a deductible business expense? Going back to that principle of was it ordinary and necessary? Um, there are some specific areas that the IRS has specific rules on outside of this ordinary and necessary, and we'll talk about that a little bit, but I think that's the most important thing to think about when you're approaching business expenses from a self-employed perspective. Examples of allowable write-offs or business expenses. These are not comprehensive. It's just to get your mind going on the kind of things that you might be able to deduct to reduce your tax on your profits, your self-employment tax. Advertising, business travel, education, contract labor, meaning you got paid perhaps for a gig and then you paid out another artist as well. Transportation and mileage, tax prep and legal fees, business or liability insurance, research, professional memberships, business meals, supplies, materials, and equipment, studio space, and postage. Sometimes people will talk about, I'm not going to get into inventory today because from an individual arts perspective, you really don't need to be keeping inventory if you are creating works of art. Um, we also, the IRS considers a small business to be under $26 million. So a lot of these more complicated business rules only apply to larger businesses, because I am pretty confident that most of us here are not seeing $25 million in revenue. No offense. I'm not. I'm certainly not. So most of us are small businesses, which makes it actually a lot easier to file taxes. So things that we should be careful with when thinking about are business expenses. Cell phone, that's something that you can deduct a portion of for business, but most likely, unless you have a separate phone for work, you aren't using your phone 100% for work. So you are able to split up expenses in a percentage. So um, that's how car expenses work. You actually are tracking your mileage so that you can tell the IRS what percentage of your time you spent with your car on business, and that determines the amount of the deduction. So my example is always Spotify because I pay for Spotify Premium so that I can learn music often. But I'm not going to deduct 100% of my Spotify subscription because half the time I'm just listening for leisure in the car, or listening to a podcast. So I might say 50% of my Spotify is deductible. How do you determine what percentage? Be reasonable, maybe spend a month actually tracking it or a week. But it's really about being reasonable, and considering realistically what you use things for. Um, Home office is a possibility to be deductible. Sometimes people are like, well, my rent should be deductible, and perhaps a portion of it is. In order to deduct a home office, you need to have a space in your home that is used regularly and exclusively for business. That means if you are also using the table as your dining table, it doesn't count. Essentially, you would want to have an area that when the IRS comes knocking to audit you, you can say, this is where I do my work. So it could be a sound booth. It doesn't have to be a whole room. It can be a desk area. Um, it could be a garage, a closet that you've converted, or even for storage, but it does need to be used exclusively for business. So if you are moving furniture to tape an audition against a wall, that doesn't count. And they also would prefer you not to, if you are someone who has a W-2, like let's say you work from home, if you use that office for your business, you can't deduct that as a home office since you are using it for multiple purposes, according to the IRS. Um, Car payments or gas, because typically always you're going to want to be tracking your mileage if you are interested in, if you have your own car and you use it for business and you're interested in getting a deduction, you need to be tracking your mileage. You don't have to take the standard mileage rate, but it's simple and I recommend it, and it's like 72 cents a mile, I think. So always track your mileage. Um, instead of I would it's better than keeping your gas receipts, in my opinion. Cable and internet is the same for like determine a percentage that you actually use for that for business if you do. Media subscriptions we talked about. Um, Mixed travel, if you're doing like a research trip, is it really tied to your artistic practice and what percent of that trip were you spending just as a tourist? The IRS does not allow us to deduct expenses for keeping up the cost of a professional appearance or maintaining your image. If there's something specific, like production asked you to get a haircut, then you should document that and keep it as as a business receipt. So it's if it's specifically tied to an income generating activity, but they say that like basically your skincare or haircuts, or even I've had people ask about dental work. The IRS says keeping up the cost of a professional appearance is something that we all have to do and is not deductible as a business expense if it's not directly tied to an income generating activity or harmful to your health. So I saw a tax law case where someone was making the argument for their plastic surgery as a business expense, like as an influencer. And the IRS basically said, okay, well, that's deductible since it's harmful to your health. So that's just like kind of a nutty example on how this stuff actually works. But yeah, be careful about if things are keeping up the cost of a professional appearance, and that includes gym. I don't know how many actors or performers we have on here, but just a gym membership, unless you are a trainer and you need a gym membership, um, it's not going to be deductible. If you're learning a specific skill, um, or again, doing something specifically tied to an income generating activity, that's fine. But generally, I would say not to deduct like your Planet Fitness membership. You can't deduct commuting to a W-2 job. You can't deduct moving expenses if you move to a new location for work. There's very specific exceptions for military members of the military, gifts, and also sales tax. I'm not going to get into sales tax today because it's not on the um, income tax form, but I know some people might be dealing with that. And if you're researching it, always be sure to be researching sales tax nexus in states where you're selling. Um, a lot of states, if not most, require you to deal with sales tax if you have a physical presence. So even if you do like one craft fair per year in a different state, sometimes you'll have to remit sales tax there. Um, but it varies state to state, and so does the online sales tax nexus. Things I honestly wish I didn't know about. Okay. What proof do I need of my business expenses? You will need to prove your business expenses only in the event of an audit. What proof will the IRS want to see? Written record with dates, amounts, and business purposes. Documentary evidence, aka receipts, bank statements, will not be enough. Um, and records should be kept regularly, not waiting until the end of the year to try and recall what everything was. You should hold on to records for 3 years, except for long-term assets, anything that's being depreciated. So usually that's like a larger instrument or camera, and those receipts should be held on to for as long as you use that for work. Um, I suggest it's so easy to get every receipt emailed to us these days. Um, So anytime you buy something for business, even if it's out and you have to take the time to type your email address into the tablet to get the receipt, I really recommend that. And then emailing it to yourself so you can have a receipts folder in your email. And if you need those records, to take those out at the end of the year or in the event of an audit. Those digital records are fine. But but again, bank statements will typically not be enough because they don't show the actual items. Options for tracking. The business bank account can help you with this. I know people use QuickBooks Self-Employed or other apps. A cloud spreadsheet, which I will share with you guys if we have time. I'll go through it, but I also will just share the link so that you can access that if it's something that will be helpful to you or your own system. Um, I think Seed and Spark is another, it's a paid spreadsheet formula, but you can get there are resources out there and I'll share a free one with you guys. So other business deductions that will come up or if you're doing your taxes on your own just to know about, um, there's an adjustment for half of your self-employment tax. So essentially when your self-employment tax number is determined, 50% of that is deducted as an adjustment to income. QBIA, which sometimes you'll see pop up, is a qualified business income adjustment, and that reduces your taxable income by 20% of your business profits. Self-employed health insurance, you can't deduct this on Schedule C, but there's a separate form if you are self-employed and making a profit and paying out of pocket for your health insurance premiums, you can add that as a tax adjustment or deduction. Having a self-employed IRA. And then there are some state specific things. Not not necessarily business deductions, but DC state specific. If you don't, I would say make sure you're looking into Schedule H for property tax credit. This is available if you don't know about it, even to renters. The income threshold is around $63,000. So anything higher, and you wouldn't be eligible for that Schedule H property tax credit. But if your income is lower than that and your rent exceeds a certain percentage of your income, it's graded. You might be eligible for the Schedule H property credit, and it can be up to $1,200. So do not sleep on the Schedule H property tax credit just because you are a renter and think it doesn't apply to you. Um, there's also something called the DC franchise tax return. It's the D30. And this might pop up in your, however you're doing your taxes, if you have a profit of more than $12,000. However, most individual artists can get out of filing this franchise return if essentially 80% or more of your self-employment income is coming just from work that you do alone. So if you're not contracting out or like selling, reselling items to make that profit, or often I see this, people have to have this if they have an Airbnb. But if 80% is just like you providing art services at least, then you won't need to fill out the DC franchise return, even if you're making over $12,000 in profit. Ah, estimated taxes. Um, dreadful. It's not that bad. I promise. The main thing to know about estimated taxes to keep the panic away from that is you don't need to file any forms in order to do your estimated taxes. You just need to pay them. So it really isn't like you have to file quarterly. You can fill out and file quarterly, and probably your estimated tax payment will be the most accurate if you do that. But you shouldn't not pay estimated taxes just because you're afraid of the paperwork. All you need to do is file. You must make estimated tax payments if you, sorry, pay. All you need to do is pay. You must make estimated tax payments if you expect to owe over $1,000 in consecutive years. So the IRS is a pay-as-you-go system. If you owed $1,000 last year and you owe $1,000 this year, the IRS is going to say, you knew you were going to owe $1,000 because you owed it last year, so you should have been making estimated payments all along. This can be really annoying to get ahead of if you're behind because it can feel like you're giving them all this money up front. But once you get like on the pay-as-you-go train, your tax filing will be a lot less stressful because you're not going to owe whatever thousands you might have owed because you'll be making those payments in advance, which you're going to have to make anyway. If you overpay in your estimated taxes, you will get those back on your tax return. The DC threshold, this says you may need to make them in your state. The DC threshold is also $1,000. So if you owe DC over $1,000 for consecutive years, you should be making estimated tax payments to DC. Um, a lot of people say setting aside 25 to 30%, and you can see how that would be safe, especially given the earlier calculation we did on profit. Um, but if I always give people an idea of their percentage based on their previous year return. So 25 to 30% is safe. Often it's really not going to be that much. Um, let's see. You can avoid the penalties by paying 100% of what you owed last year. That's basically what the IRS just wants you to do is to pay as you go. If you knew you were going to owe 2 years in advance, you should be paying them. And the reason the way they compel you to do that is with penalties and interest, which can be nominal, but they can also add up. And it's also just like, why give them more money? All right, let's talk about some common misconceptions. Um, One is that you don't have enough expenses to deduct. As I hopefully got across with the standard deduction versus itemized deduction, you always have enough expenses to deduct. If you have a dollar, deduct it. Sometimes it's like $5 will make a dollar difference in your tax. For some people, it's $20, but always be tracking and deducting business expenses because it's going to help you pay less in taxes. It's the best way to pay less in taxes, in my opinion. Um, Another misconception is if you didn't receive a 1099, you don't need to report the income. Um, if someone pays you over $600 or more, they're required to send you a 1099, and that 1099 also goes to the IRS. However, if you are just doing smaller gigs, you should still be reporting that self-employment income to the IRS, is what I should tell you is the law. Um, because it is. So yeah, just because you didn't receive a 1099 doesn't mean you didn't have taxable income. Another misconception is that the IRS will audit and count your business as a hobby if you don't show a profit in 3 out of 5 years. This is just one of like 12 guidelines the IRS looks at in determining if you're running a business or if you have a hobby. Um, and I would say it's not really accurate anymore. I feel like this is maybe honestly like the 3 out of 5 years is from the 80s. Most companies, most even huge companies don't make a profit 3 out of 5 years. So if you are like comparing yourself to these large corporations, obviously like they're getting away with a lot more than we're getting away with, I would say, as individual artists. It's okay if you take a loss on your business. It doesn't mean that you have a hobby or that your practice is not legit. It's actually, I would say, more legitimate to deduct all the expenses you really had. It's not easy to make a profit as an artist. I think most of us know that. Um, Another common misconception is if you file an extension, you don't have to pay your taxes until October. So filing an extension gives you a 6 month additional 6 months additional to file your taxes. That means you'll avoid failure to file penalties or late filing penalties. It has nothing to do with the time you have to pay. As we already talked about, it's pay as you go. So if you don't file in April and you filed an extension and you owe them and you don't pay them until October, you're going to see interest and penalties accrue. So filing an extension gives you more time to file, but not more time to pay. Um, so in you may receive a W-2 for work. You may also receive a 1099 NEC, which means 1099 non-employee compensation. This is income received business, self-employment, or independent contractor income you received in exchange for services. A 1099 MISC or miscellaneous is basically other income. So this could be grant, award, or prize money you received for which you did not have to perform any specific services. Could also be royalties, rents, medical, or resale income. Um, in terms of, there's been a lot of different legislation on like Venmo payments, like payment apps and how that gets reported. If you made at least $5,000 in one of those payment apps, that is going to be reported to you on a 1099 or should have been reported to you already on a 1099 this year. That's if you have a personal Venmo account, that's not where that's coming from. You need to have a business account in order to be getting that 1099, in order for that information to be going to the IRS. So if you're just on family and friends Venmo, even if you're passing money back and forth, you're not going to receive it. You're not going to be need to worry about receiving a tax form for that. Um, One thing that did come up is I had a client got paid on a 1099 um, on PayPal for fantasy football. And that's just a good example of that's taxable income because it's considered gambling income. So you would receive a form for that and be taxed on that as gambling income if you won your fantasy football pot and got paid through PayPal. Other types of 1099s you might see, a 1099-R for retirement, 1099 int for interest, 1099 dividends, but 1099 NEC is probably the most common one. Just checking this. Okay. Okay. Uh-oh. If you think you might be in trouble for with with the IRS, things that could mean you never filed, you can't pay, you didn't pay enough. Um, The number one thing to know is the IRS can't put you in jail. You can eventually be prosecuted if you're committing fraud, but the IRS themselves cannot and will not put you in jail. Um, if you are not sure of what information they have on you or where you are as a filer, you can go to the IRS .gov, go to irs.gov and create an online account. There's a lot of information in there. So you'll be able to see your wage and income transcripts from several years back, which will show basically what information the IRS has on you, like how much income other employers have reported to them. So if you are someone who's behind or you don't know where to start or you are not sure, like you just lost track of this stuff, creating an online IRS account and seeing what is in there is a good way to get started. Um, if you never filed, I would say file your return as soon as possible. Um, you can only get a refund for 3 years. So if you are due a refund and you don't file, the IRS will likely not come after you, but you can only get your refund for 3 years back. Um, if you owe, they can collect on that basically indefinitely. So, and if they're determining how much you owe because you didn't file and you didn't include those business expenses, it might be more than you actually are having to pay. If you can't pay your bill, I will always say pay a small amount so that the IRS knows that you're making an effort and not ignoring them. That actually goes a long way if you have to negotiate. They are legally required to charge you interest, but if you, again, are behind on your taxes, you're filing now, you owe penalties, there is an option for first-time abatement, that they sometimes will give to first-time offenders if it's, your first experience with owing the IRS. But they will always charge interest, and they are legally obligated to do so. Unless you have very extraordinary circumstances, the IRS is not going to forgive your tax debt. Um, if you are in a federally declared disaster area, like all of Los Angeles, basically this year has an automatic extension to pay their taxes. So if you that's not doesn't apply probably to any DC residents today. But if that did happen, always check to see if there are extenuating circumstances that give you more automatic time to pay. And that would usually be a federally declared disaster area. If you have an issue that you can't resolve with the IRS, um, I would look into the taxpayer advocate service. They can be a go-between between you and them if for some reason you can't resolve the issue. And a big thing I would say is if you get a letter, read the letter. Don't panic because sometimes it's just an identity check. Sometimes they're giving you an identity pin. Sometimes um, they just want to pay you interest on a delayed refund. So always read the letter. Do not ignore mail from the IRS because if it's an identity check and you don't respond, um, you might not get your refund just because you were afraid to read a letter from the IRS. So read the letters. Um, Also a good resource is to check, right? I mean, DCCAH is obviously a great resource, but also like DC Small Business Associations, the DC Small Business website is a great resource, and it's actually pretty easy to meet like face to face or on the phone with a small business resource person in the DC area who can help you with stuff if you are trying to get more legitimate about your art practice as a business. That's something I recommend. And there's also Washington area lawyers for the arts. If you are in legal trouble, always look for these. I think like sometimes resources are not easy to find, but there are resources available. Um, Options for filing. So you can DIY or use fillable forms. Um, Online interview programs, which includes free file and paid options like TurboTax. TurboTax is not free if you do have a Schedule C or self-employed income. I know that. Um, there is a limit on the income limit I think is 79,000 on free file. There's also volunteer run or free options for those with income around 65,000 or under. There are some other limitations on that, but you can always check out VITA, as I mentioned earlier, the Volunteer Income Tax Assistance Program, which provides free tax prep for lower income filers, as well as getyourrefund.org, which is free again for lower income filers. Or you can hire a tax pro like Artist Tax Prep if you want a little more information and just to know that someone who gets it is dealing with your taxes. We at Artist Tax Prep, we're all artists, all three of us, so we do get it. And if you want, you can check out our website, artisttaxprep.com, and schedule a free call with a preparer if it's something you're interested in, potentially working with a tax pro and you just aren't sure if it's right for you. Um, you can feel free to check that out. We also offer sliding scale because we want people to get their taxes done. Um, I'm gonna I have some more to share, but I'm gonna end the screen share for now and answer a few questions before I get into the spreadsheet that I want to share with you guys because I think that just makes sense.
Yep. Also, just to note, there are additional questions outside of the question box. So
Q&A.
right now we have six in the Q&A, and then I have seven that I've been trying my best to keep up with in the chat. So,
Okay, great. I'm gonna look. I'm gonna probably, yeah, I'll read them out loud from the Q&A
okay.
if that's okay. Two.
Hey, girl.
This is a question that two individual artists receiving grants from the DC Commission for the Arts, each receiving $5,500 a calendar year for 2024. They're married, but each received a different 1099 form from the DC government. One received 1099 miscellaneous, and one received a 1099 non-employee compensation. Um, Yes, sometimes there is an error. The question is there an error on the part of DC government? And sometimes there is an error in if you are going to receive a 1099 MISC or a 1099 NEC. That's not an unheard of issue to me. Um, You have the option specifically with the DC fellowship because you are not performing services in exchange for the award. So for the project's events, if you have a project and events award, you need to report that on your Schedule C. But if you have the fellowship grant award, you can choose to report that either on your Schedule C or as other income on what's called Schedule 1. So
Hmm.
it's not unheard of. I think I would want to know more specifically if one of them if they each received a different grant or if they received the same grant. But you have the option to report that 1099 MISC either as self-employment income or other income, as long as it was a fellowship grant for which you did not have to provide services in exchange for the award. Okay. How do you determine can be considered an itemized deduction? So I might have covered this already, but the itemized deductions um, are state and local income tax, mortgage interest, real estate tax, property tax, other taxes that you've had to pay, medical expenses in excess of 7.5% of your adjusted gross income, charitable donations. So those are the things that go into the itemized deduction. Would music lessons be eligible for a tax write-off as a business expense? Yes. So education is a legitimate business expense, education expenses. The caveat for that is that um, you cannot be starting your business with education. So if you are, let's say you're changing fields. So let's say you're a musician and you want to go into coding and you take a coding class, that's not an eligible education expense because you're changing fields completely. But if you're taking education to keep up your artistic practice or get, let's say, a teaching artist certification in your field, that's definitely deductible. Education is deductible as a business expense. Why is a business checking account the most ideal thing to have? It's just best practice to keep the accounting separate. Um, it's part of the general accepted accounting principles, GAAP, which is just how we do accounting generally in the United States and maybe internationally. I'm not an expert on that. Um, so it's definitely okay if you have a regular checking account that you use exclusively for business. It's just about these generally accepted accounting principles that's considered best practice. My partner and I got married last year and we're both working artists with tons of 1099s. Is there anything we need to consider or do differently? We're used to filing separately. So there is a specific designation. First of all, most people who are married are going to benefit from filing jointly. That's not everybody, but most people are going to benefit from that, from filing jointly. There are several credits you are not eligible for if you are filing separately, but there are certain situations where if you live in different states, for example, or you do have a really high mortgage, it's going to benefit you to file separately. Mostly it's going to benefit married filers to file jointly. Um, that doesn't mean you can't file two separate Schedule Cs and probably should. So if you're married filing jointly, you might want to file two separate Schedule Cs. There is a specific married partnership agreement that the IRS allows you to enter into, which I won't get into because it's a little complicated, but that is a possibility. But generally, I would suggest, and very generally, married filing jointly with individual Schedule Cs. A boutique gets 50% for the consignment of my jewelry. An H&R Block has a section called commissions paid to each. Yes. Can I include this amount in there? Yeah. Commissions and fees is one of these categories. A lot of the time when you see the categories, if you're using an interview program like H&R Block, the categories are based on what the Schedule C lists. So commissions and fees is a specific line item on the Schedule C, and that's where I would put this. I would also put like Any Venmo or PayPal fees can go there, as well as like application or audition fees. I need to file for an LLC that is yet to receive income but has expenses only. Are there volunteer service available? I think actually that the VITA program may not allow for uh, a loss on a business. LLC in DC, you don't have to file necessarily a separate form from the individual income tax, but I'll think about that. I think you're going to have a hard time. It's hard to find um, pro bono services when you are doing a business. It's much easier to find those services as an individual. The online filing websites I use automatically place me in a standardized itemized deduction. How do I know trigger being able to enter business expenses as well? So, look for Schedule C, look for profit and loss from business. You will have to make a determination on standard or itemized deduction, but again, that's completely separate. So I don't know how every interview program online works. Um, but you always should be able to enter those business expenses, somehow finding Schedule C or profit or loss from business. Because you will be automatically placed probably in that standardized or itemized deduction, but they're completely different sections of the tax return. I recently moved from DC to DC from Pennsylvania, and my business has changed from graphic design to fine art mostly. In the other state, I set up an EIN business name and a business account, and now selling arts and crafts fairs in Pennsylvania, Virginia, and Maryland. So I would check out something like Seed and Spark, in terms of tracking if you are someone who's doing inventory and sales, because they provide nice spreadsheets for this. And again, let me maybe see if I can put it in the chat now so that you guys can get an idea of it. I'm putting in the chat, everyone, the link to our income and expense tracking sheet. And I'm gonna screen share it. Um, uh, After I finish answering as many questions as possible. So Hillary, as many of these that I can find. So Hillary, you could check that out. But because we're not dealing with sales tax, you might want to check out something like Seed and Spark for also dealing with the sales tax. Um, I think, can you give plus minus of LLC versus subchapter S? I think this is asking about LLC versus an S corp. Um, Again, this is just not something I'm not really going to talk about S corp because we don't do those filings. We only do individual income tax filings up through sole proprietorship or single member LLC. Basically, if you file as an S corp, once you have an LLC, you can pay yourself, and then you're paying tax on the money that you pay yourself, and then you're dealing with capital gains tax as opposed to self-employment tax, which can sometimes be beneficial. But again, it's not going to be beneficial until you're profiting at least 100,000 a year, consistently.
All right. And Farrell, uh, I have some other questions that were in the chat. So,
Great.
do you have to have an LLC or do you have to have an LLC or even if you don't, is it still considered a business if you have a profit motive or made $400 or more?
Yes, you still have a business as long as you have a profit motive and or took in $400 or more of self-employment income.
Indeed. So you do not need to have an LLC for it to be considered a business, just to be clear.
No, you do not.
All right. If I sell $400 worth of art in a year, should I deduct all my expenses for the year total? Uh, the studio, all 12 months, all art supplies, or only the exact supplies and studio rent to make that one painting?
You should deduct all your business expenses for the year. I think, yeah, that is something that people often will underestimate about themselves. Everything you're putting into the practice can be deducted. It doesn't have to be just the supplies that you put into that one painting. So if you're making more paintings, or if you're planning to make more paintings, or if you are doing marketing on social media but have yet to take in the income on that art, that's still deductible.
Boom. All right. I saw a spot for gas mileage, not standard mileage rate on TurboTax. Is there a spot on TurboTax for standard mileage rate?
I don't know what TurboTax looks like or allows. I if it works for people, I'm happy. I don't like TurboTax because I think the information is opaque. And you can often, because of the way the questions are asked, it might not be clear to you. So there should be a place for you to do the standard mileage rate, but I don't know, like, how to, I couldn't tell you where to find that in the interview. Sorry.
All right. Um, Another TurboTax question. I use TurboTax and file jointly. Does this service take into account some of the schedules like Schedule H that might apply?
Yeah, they should, as long as you're filing your state, they should take Schedule H into account. But again, I would double check it. That's like one of the like bigger problems with these services is that it's hard to know what you're actually getting or not getting. It's hard to see. So you might have to scroll through a lot of pages to find that Schedule H. But yes, they should be taking those into account.
Do you have a business app that you would recommend?
I don't. I need to look more. I really recommend like whatever works for you, whatever is easiest. So I hope to review some of those, but no, I'm very analog with my tracking.
I believe this question came or comment came during your discussion around virtual payments like Venmo and PayPal. Um, I got paid a lot on Venmo this year and got a Venmo 1099, but it was a personal Venmo account. They also mentioned that they got a PayPal 1099 as well.
Yeah, so all this stuff is just the reason why you should be tracking your business or arts income on your own separately from how any payment app is tracking. So, um, maybe, and I'll answer these other few questions in a minute, Dwayne, but let me screen share this because the best way you're going to get forms, you're going to not get forms. You don't actually need the 1099 to file your tax return. If you're missing a 1099, that doesn't mean you shouldn't just put that income on your tax return. Because unless there's withholding, which means unless there was tax withheld from that, the IRS um, doesn't need you to send them the form. So if you're missing a 1099, or if the 1099 is not accurate, there are ways to deal with that. You should be going with your records as long as you know that they're accurate. So as long as you know what your business income was, which again is why I recommend tracking. So this is our self-employment and expense income and expense tracker. Um, it is It might be very useful to you. It might not be useful to you. Again, I really recommend using the thing that makes the most sense to you, but I think it's pretty straightforward. And it's what I use to track my business income and expenses and what a lot of our clients use. I do things by just using the Sheets app on my phone and entering things in addition to sending the receipts to my email to that email folder labeled receipts. So again, if you do this, you're not going to need to wait for those 1099s. I mean, I'm not saying file your tax return before you get your tax forms. Don't do that. But if you're like, oh, this person never sent me a 1099, that's not what should be preventing you from filing your taxes and getting your refund. And the reason I have this form set up the way I do, is because this is something that will help you in the event of an audit and it feeds very nicely into the tax return. In order to use this form, you need to go to File and make a copy because it's not going to be editable here. But anyone can use this. You can share it with people that you know. It's just a free resource that we provide. And the reason it's free is because I think we should just have more access to this information. And also, it just makes things easier for when we do your taxes. Um, so on the income sheet, date of work, do not include work on here that's paid on a W-2 because as we talked about, the tax treatment of that is different. The date you got paid, the amount, who paid you, payment type, and this is where you can match things up with that Venmo or PayPal form and see if it's accurate. Description of the job and this tracking number if you use invoices or another system. So that's the income sheet. This is an example. This is just example numbers of estimated taxes, but a sheet if you're someone who needs to pay them or is trying to determine if you need to pay them. Um, there are comments here to tell you what income total you need to put in here. It will multiply it by 25% and give you the federal estimated tax amount or the state estimated tax amount that you should remit and the deadlines for that. Um, it has all the sort of information that we talked about as a refresher because this is something that people generally need to hear more than once in order for it to make sense to them. And there's a great little video. This is a 2-minute IRS video. Usually their content is like not useful, but this is a very good explainer if you're like, I'm trying to understand estimated taxes, and if I need to pay them, watch this 2-minute video. And I think it will give you a little bit more clarity, especially if you're like a visual learner. Um, so that's this sheet. Expenses. Okay. We have the date of the expense. The category, we talked a little bit about categories. These categories are determined by what's on the Schedule C. We talked about the commission and fees category that you might see on H&R Block. That's why these are what they are. If you put something in the wrong category, it is not the end of the world. We're just doing our best to make things fit into business terms that are not designed for artists. Um, the amount. You can include the sales tax here, who you paid, description, why you made the expense, and the type of expense. So this is in here for people who have mixed 1099 and W-2 income, which is a lot of the people that we work with at Artist Tax Prep. So that's why I have this here. 1099 would be if it's an expense directly related to 1099 income or potential income. General or operating is if it's like if you are an actor and you get headshots, that is something that might get you a W-2 job or a 1099 job. So if it's an investment that could lead to either outcome, or that benefits both sides of your income, that's something that would go in general operating. And W-2 is like if I'm commuting to the Kennedy Center for a job that I'm being paid on a W-2, that's strictly a W-2 expense. That's not going to be deductible, but sometimes it's easier for people to track everything together. So that's why I give that option here if you want to know how much you're spending overall. If you scroll over to column J, you will see examples in each of the categories that are in the drop-down menu to give you a good idea of what types of things might go in what categories. These are not comprehensive, they're just examples. Again, always going back to that ordinary and necessary question. But this might be somewhere to look before you go on a Google about is this specific expense deductible? And if you have questions about these, also just put them in the Q&A so we can try and get to them. Um, I'm not going to go over each of these things individually, but you have access to this to do so if you want to get more information. Okay, couple more specifics. The car expense, I already said, always be tracking your mileage. Write down your odometer at the beginning of the year and the end of the year because your standard mileage deduction is going to be based on how much you use the car for business versus personal. This has a place to put expenses if you are someone who wants to use the actual expense method. Um, you can also just track your mileage if that is easier for you, um, using the date, your destination, and the number of miles that you traveled. This chart is a little confusing because what mileage is deductible can be a little confusing. Um, but this will give you an idea of which mileage is deductible. If you have no work location, or if your work location, your primary work location is your home office or home studio, that would be considered your regular or main job, even though it's also your home. So if you are traveling from your home office to a 1099 gig, that's deductible. If you're traveling from your home office to a meeting with someone about potential self-employment work, that's deductible. If you're traveling from one 1099 gig to another, that's deductible. If you are commuting, even if it's a temporary work location, that's not deductible if it's a commute on a W-2. Um, Equipment is specific because it's something that you may want to depreciate, which means that you're spreading the cost out over the life of the item or several years. This As a small business, typically you have the option to deduct the entire amount in the first year. But you might not want to do that if you're already taking a loss, for example, or if it's a particularly large purchase, like a grand piano, which can take several years to pay off. So you may want to spread that out, or your computer or lighting equipment or anything like that. Um, what was I going to say about that? Oh, something to note about this is that your payment plan is not deductible. If you are paying interest, that's deductible, but you should be using the entire cost of the item as the deduction and not the amounts that you're paying on your payment plan. Um, so this is the kind of information that we need if you are going to depreciate an item. I also put a travel log tab here. Um, And this is because you have the option, if you're traveling for business, to take a per diem rate on your meals. Um, they say you should also keep your business meal receipts while you're traveling, but this information allows you to calculate a per diem rate if that's something you want to do. Meals are only 50% deductible, but you should be reporting the whole amount into like the meals category, and that will be essentially a 50% deduction of that. Um, I have to move this. And then home office. I did see a question of how do I calculate the home office area? You just measure it. You have to measure it. So often people are like, I don't know the square footage of my living space or my home office, but I don't either. So you have to figure that out, either asking your landlord, looking it up on Zillow, or just measuring your living space by walking around, or I don't know who has a ruler. I have measuring tape, right? People have measuring tape. So yeah, you calculate it by measuring what your actual office space is. And this is, again, this is like the deduction will be based on the size of your office as compared to the size of your entire living space. Um, This last tab on here is just something we use if you're someone who is tracking income and expenses in a different way. So I'm just letting you know that that's on here. And it might be something that's helpful to you if you're organizing your expenses for the end of the year to do your own taxes or to work with a tax preparer. Um, and yeah, that's our self-employed income and expense tracker. Dwayne, were there other questions?
There are a few other
Great.
questions, and more have been coming in. I just want to say before that was a very useful form. And I will be putting it to use in my own artistic practice.
Great.
If I sell my studio, do I need to charge the customer state sales tax? If so, do I pay that to the state quarterly?
If you sell what? I'm sorry.
If I sell my studio, do I need to charge the customer state sales tax? If so, do I pay that to the state quarterly?
I'm not sure what you mean by selling your studio, but do
I
you know what that
I
means, Dwayne?
imagine they mean like if I sell my art studio, like my space,
Oh.
or like rent it out or something along those lines. Do I have to charge my customer the state sales tax? And if so, do I pay that to the state quarterly?
I'm not sales tax
Oh,
is not my
wait.
department. No, what?
I now see if I
Okay.
sell my artwork, not studio.
Yeah,
Oh, if I
typically,
sell from my
okay.
studio. I'm
Yeah.
sorry, I'm confused.
Yeah. So typically there's like a certain dollar amount you have to reach in the state. I probably should have prepared this information for you guys, but because I don't really deal with sales tax, um, but yes, if you are selling goods, then you typically will be remitting sales tax. But I would research that with DC or your state.
There was a question of, would you mind dropping the link for the document that you just covered in the
Yes.
chat again?
Yes, and it's our website is artisttaxprep.com, and you can also find it there in client tools, but I've shared it again in the chat.
There is a technical issue. Your Google spreadsheet does not include your notes and hints. I opened it in Safari and Chrome. Any suggestions? Thank you.
Is it after you made a copy? I think it might be after you made a copy. If you're looking at it, I'll think about that. I'm gonna check it out. It might just be if you made a copy already, but if not, I will try to figure out a way to make those live, Lori. They're not.
There's also a comment like they can't
Yeah.
edit it. And so I believe what you're saying is you have to make a copy of the
Yes.
document so that they can then edit it. So Claire, you'll need to make your own personal copy of the document because that's the template and we don't want to lose the template.
Okay, great. They got it.
All right. Yes, this Zoom will be shared. And I will drop the link again in the chat. It'll be going to our website on dcarts.dc.gov, but I'll drop that link in the chat very shortly. Just reading some more questions. Do, 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 do. Somebody asked, what if your meals are home cooked? So you're not purchasing food out and about, but you are buying the groceries to then cook in your home office or something along those lines.
Yeah, so what's considered a business meal is if you're doing business over the meal. And it has to be a restaurant meal for a business meal. So, um, like if I was meeting with Dwayne over lunch to discuss if we were going to do another presentation and I paid for that, that would be considered a business meal. You can't just deduct food you're eating while working, or if you went out to eat like while you're on a contract, if it's local, those are not business meals. You have to be actively doing business over the meal. Um, in terms of if you are traveling, like let's say you're traveling for a contract, for a self-employed work contract, and you're staying in an apartment and doing your own cooking, that food is deductible if you're traveling. And traveling means overnight outside of your tax home, essentially. So travel meals can include groceries, but business meals do not include groceries or like convenience store or just eating because you are also working. You have to be actively doing business and it has to be a restaurant meal. During COVID, you could do takeout. You can't, you have to actually be at a restaurant for it to be a deductible business meal.
All right. Scrolling. If I sell a painting at an art center or gallery and they deal with the sale entirely and send me a check for the amount minus their commission, do I need to deal with this on my taxes?
You don't need to deal with sales tax. They're dealing with the sales tax, but you do need to report like the income that you ultimately receive from them, um, and any expenses that were not deducted from the form that you also had in addition, you should be deducting.
All right. If I pay many different musicians throughout the year for gigs, is it better to send them 1099s if over 600, or just list all those payments as contract labor on my taxes?
You have to do both. So if you are, there is a checkbox on the Schedule C. Did you have to pay anyone 1099? Did you do it? Um, and they can fine you for each 1099 you don't send. So I recommend there are free services that you can, or very cheap services I think that you can find to do this online. You can also, if you have more than 1099s you have to file, the IRS is now requiring that you do this electronically through their IRIS program on their website. It's a bit of a headache, but you should be e-filing 1099s if you have over 10, and you can find a way to do it for free. But yes, you should be collecting W-9s, which will give you their social security or payment information, and then sending those 1099s by January 31st. So check them, send the 1099, and also include everything that you pay out in that contract labor deduction, because you're not just going to get the deduction just by nature of sending the 1099.
Does 110% of prior year cover? Oh, wait, that was a typo. I remember that. Tentative. Okay. Does 110% of prior year cover tentative estimate payment for IRS? Does DC have a safe harbor provision?
Yes, if you pay 110% of your prior year income tax, that will cover your estimated tax payment in that you will not owe penalties.
All right. I was advised by my gays lawyer to open an S corp, which I did. However, I earn under 100,000 a year. Just opened this in 2024. What is your advice?
I would follow the advice of your lawyer if if they believe that would be beneficial to you.
All right. Uh, that was I think we may have almost all of them. How do I account for sales tax for workshops or teaching artist services?
As a deduction, I'm not sure what I you probably don't have to remit sales tax for you don't typically have to remit sales tax for services. You'll
Yeah.
just pay income tax.
Yeah, because I believe sales tax is connected to goods, like physical goods
Yeah, there are some
or
specific
food.
services in DC, like maybe like mechanics, I'm not sure.
Mm.
Don't quote me that you will have to remit sales tax, but generally like teaching artists, things like that, you won't have to pay sales tax, you're paying income tax.
All right. Would your company be able to look at previous tax returns I've submitted and to see if I paid too much?
So the thing about reviewing a return is that it's essentially as much work as doing the return. So we essentially charge the same amount for reviewing. So it might not be efficient for you to do just because in order to be accurate, we have to look at the same information and do the same work we would do to do the tax return.
All right. Will having the 2025 artist tax prep, self-employment, and expense tracker filled out be enough for a tax preparation service to do my taxes?
Yeah, I mean, I think so. That's what we use. I mean, usually a firm or anything will have their own specific form to fill out. But typically you'll be able to use, yes, you should be able to send this. I would send it as a spreadsheet, like an Excel doc, or share it via Drive so that someone can sort it if they're doing your taxes. But yeah, it should be. I mean, most accountants will not want your receipts anyway.
All right. And with that, I think we may have gotten everybody's questions. Just scrolling one last chance or one last sweep. Do you only help with, hold on, I can't see it because it's giving me a notification. Oh, do you only help with filing or do you help outside of tax season?
We help outside of tax season, but we're slower, because we all are running our own artistic practices as well. So we definitely do, and we do like consultation work. And we will also help people get caught up if you have back taxes outside of tax season. But again, it's just like at a slower pace. But yes.
Indeed, indeed. So I personally want to thank you, as well as on behalf of the DC Commission on the Arts and Humanities. Thank you very much, Farrell, because I realize I've been saying your name incorrectly this entire time. Forgive me.
That's
Farrell
okay.
Parker, and Artist Tax Prep. Thank you so much for your work and for what you do. Um, we will be sharing this Zoom via our website. It will be available, and I'm dropping the link in the chat again. If people wanted to get in contact with you, how could they get in contact with you?
You can feel free to email me, Farrell at artisttaxprep.com. I put the link, I'll type it again one more time. But if you think of something after this, you can feel free to email me. And then if you want to work with us or want to talk to a preparer to see if you want to work with us, artisttaxprep.com.
There you go. All right. On behalf of the DC Commission on the Arts and Humanities, thank you very much for attending this Business of the Arts session, tax considerations for individual artists. We hope that you will join us for our next session, which will be March 27th, where we'll be having the Business of Community session. We're looking forward to having Life Pieces to Masterpieces joining us for that session. Thank you very much for your time. Take care and be well.
Thanks, everyone.